Hey guys, there's a lot to cover. Instead of wasting everyone's time and saying, let's look at the S&P, we're hitting highs, I want to show you something that I've do and I've been doing for about 20 years at this point, and how I trade around core positions and trading positions in regards to the current environment that we're in, especially even on a day trading environment, because a lot of people obviously are getting stopped out. We have to go through the ADP data and what's going on ahead of time, and we must talk about the broadening out. As always, subscribe, click all notifications. Let's do it. Now, one of the things that's happening to the market that you may have noticed is the amount of volatility that's going on. And I want to walk through what we did today in the community and just show you how you can do this for yourself. And you're going to watch a little bit of this live. But below is ATR, and ATR is average true range. And I'm going to take BE because this was one of the ones that we had today that we were successful on, but also because if I take a look at this level, you can see that the ATR of these names has just been going up and up and up. And it doesn't matter which name it is right now. If you take a look at them, there's IREN, and you'll see that lifting the same exact way. And I can go through a myriad of names like this, but you guys are pretty much all aware that the volatility of the market is getting greater. And you can see through WDC, all these names, they're all lifting, they're all pushing, right? All right, great. So what does this mean for you, and why do you care about this? Because what's happening to a lot of people, and I'm going to say this, and everyone's going to nod their head, you're buying names and then you're getting stopped out of them and then they're going higher. And that is exactly what happens in these kinds of markets, really when you're in a bull market and you don't have a Fed backstop. And let me explain what I mean by this. So when you're trading and you have a Fed backstop, let's take a look at the S&P very, very quickly, because I want you to get this. I want you to understand this. When you see the ATR and how the ATR spikes and then comes down, it just means you're going to have more volatility. Doesn't mean if you're going to go up or down. And you can see this. This is the S&P and this is the ATR of the S&P. And really what it's just telling you is this is the true range of any given day. This is the expected range, right? It's just telling you that within 67%, you're going to be in that range. If you just think about it that way, it'll make your life super, super easy. And it's always interesting because you'll always see, like, if you're really going to roll over, like if the market's truly going to roll over, you always start seeing it lift like a little bit ahead of time. And it's kind of funny because like right now we just keep grinding as it gets tighter and tighter. Interesting, right? But here's the point that I'm getting at. What your expected range is here versus here is completely different. So why people will use the same level of stops here as they're using here when they're doing trades is just silly. It's not going to work. Right? This is why the majority of my stops with everything that I use is always based around a level of volatility, whatever the volatility is of the market. If you ever see, like when I use private clouds or any of that stuff, it's all scaled based upon volatility and rate of change, because it doesn't make sense. The market's not static, it's dynamic. But here's the point that I'm getting at. No matter what name we use in here, whether we use Apple, you're going to see little movements in Apple from the bottom up. Individual names have gotten a little more volatile, and the names are changing, and we're getting into these smaller cap, mid cap names that are crushing the Mag 7. And we all see this. We all see, if we compare these names to like the Mag 7, they're absolutely getting destroyed, right? We know this. So if I took something like Mags and divided it by BE right now, it's not even close. BE is absolutely destroying the Magnificent 7. If I took Mags and divided it by IREN, right? IREN is destroying the Magnificent 7. And we just kind of go through them. Space phones, ASTS, you'll see it over and over again. You don't want to own tech. You want to own small tech. You guys already know this. You don't need me to point it out. But I want to show you how you're supposed to be trading these names, or how I trade these names, and maybe you can find some value in this. So first and foremost, I have to expect that if my ATR is here, I could have a 7-point range. In that day, any given day when I'm there, I could have a 7-point range. This day, I could have a 6-point range. And it just means not anything's wrong, but I'm just in a 6-point range now, because that's the ATR, right? And you can look into how the ATR is calculated. And I have books on this. If you guys want me to, I can refer the books in links below, or just comment on that and I'll do a video on it. Here's what I want you to get. None of us know what's going to happen, right? Like no matter what they tell you, like your favorite Twitter guy posting, all that, none of us have a clue. But what we do know is that we want to have certain names that we want to be involved in. So having core positions and trading positions, even on short-term basis and day trading, makes a lot of sense. So what we saw today was an opportunity to get involved here, and we bought this name. And we knew that if you take out a higher high on anything that has like a strong high beta move the previous day, you always take out those highs. It's almost always. So we took it out, we ran up, and this presented a great opportunity for us to make a couple dollars. and I'll walk you through that live. You'll also see that once we broke here, you no longer hold the breakouts. You have to get out of the way. Why? Because you have a $7 move. So if you know the average move down from here, from the top, is going to be $7, then you have to realize $7 puts you down here. I don't want to go for that ride. I'm sure that you don't want to go for that ride either if there's a better way. But wait, there is. So you're scaling out and then you're setting the rest at your break even or a pivot bar. Get stopped out, and then you just wait for the next setup. So what you're doing there is you could be holding a core or getting rid of the core and then just trading around it. So comes down, tries to rally, and what's it do? It presents another opportunity in here for us to buy it off of these bars, tries to rallies up, fails, trims, goes up again, trade it again. So by the end of the day, even though you pulled money out twice in here and you have a core position, then you get back to a full position, you're still in a full position by the end of the day, most of the times if you do it right. And then on top of that, you've pulled out 2 trading positions twice. And candidly, I'm still in this. So it's a pretty easy strategy when you get used to it, but you have to give yourself the benefit of the doubt here that you're going to be able to pull this off. But most important tool that I can tell you with any of this, and I can do a whole video on this, you have to look at the ATR if you're trading today. You have to look at that and say, that is normal. Whereas if I looked at WDC today and said, oh, okay, we're up 18, we're up $12, and I see this at 5. Okay, that's 3x the ATR. That's not normal. So I shouldn't have assumed that that was going to happen, right? And I know, never assume, but you have to look at this stuff and just assess what's really going on. It's super important to get that. Let's watch this BE trade, and then we'll go from there.
BE, you hit my level, so it's on. Let's go. Let's dance. Because you're not going to stop. You have too many people. So let's start. But the first buy, I can get rejected. It's 85.29. I paid 77 for it. There it goes. Trim small. There we go. Up $1. Trimmed. Up 2. Trimmed. I'm just selling as it's going up. I don't want to be out of it, but like if it comes back down, I just don't want to lose money. If I can pull enough out that my stop becomes that area and I can stay in it, that's fine. That's all I need to do. No, going the wrong way. Trimmed, rest is break even. Closing under that, I'm going to close the rest. I made money on it. I'm not going to lose money on it. It should really hold that level. If it holds there, I may actually add to it. But if it doesn't and it closes below there, I'm out. Nope, so you broke. All right, is what it is. Next. So there's the undercut that we're looking for, right? Say it. I'm going to try here and see what I get. I like this. See that right there? I'm going to use 29, and I'm probably going to hold the piece now, even if 29 breaks. I paid 79 for it, 84.79. That's not encouraging. That means that these people are still selling. So I cut half on it. I'm going to hold the other half and trade around it. I lost 30 cents on that. Once it flips this area right here, I'll just add it back. But until then, I could come down to here. So why lose the extra money? It's just pointless. Up $1 on that trade. All right. So I'm going to trim some of that BE up $1.
I'd like to spend more time doing educational videos, but candidly, between all the trading, the community, my own research, I just don't have the time. So I'm trying to interweave them with the information so that you can actually see how it's all applicable. I do think that this is pertinent. So you could see Lily here, this DTL, and you're breaking out of it. Super important to get that you're already pushing those extremities out, but these names are on fire now. Pfizer, Merck, all this stuff. And I think it's super interesting because these were the companies that were supposed to get destroyed. And all of a sudden, now they're in the White House. Everybody loves them. Everybody's buying these names. It's very difficult for a market to drop if we're going to start rotating through sectors that are going to start benefiting from what's going on, whether you agree with the administration or don't. But if these companies are going to continually benefit from the administration, you have to realize that the market's not going to drop. No matter what we think is going to happen, it is very clear that our read on this market so far year to date, everybody's read on this market on how this was going to go has just been dead wrong. The pharmaceutical companies were going to be in a lot of trouble. They really don't look like they're in a lot of trouble if we're being very serious about it. I mean, they really haven't gone anywhere. Yes, but they were already on downward trajectory since we started in May. All of them were. They don't really look like they're falling out of bed, do they? Right? If we really go back to like these key areas, if you can find them, they're actually up since then versus what they were doing before. So we know that this was supposed to be the be all end all of these corporations, but what are we saying? They're just outright buying them. It's just outright just buying them. Now, you're not seeing so much of the, the ones that are overseas, but it's something to think about. And you're seeing that rotation spill over. XBI, based upon the numbers that we saw today. We had some really bad numbers out on ADP, and we're going to cover it here in a second. I really think that if you think about this, and all of a sudden the pharma starts having more money, and then you have lower interest rates, pharma starts buying biotech. That's just the way it is. It's always been that way. And I think we're setting up for that again. I think it's one of the reasons you keep seeing the XBI names push, but these MLYS, like these kinds of names, they just keep on grinding higher and higher, forming flags. I don't think that that's going to stop. So if we keep rotating sectors as we're doing, for example, look at ASML today, all of a sudden nobody wanted to own it, a month ago, and now you're up $300 just like that, and you're breaking out. It's absolutely crazy. All of a sudden everyone's going, oh yeah, we're going to need storage. And that's why these names are moving the way that they are, because everyone's starting to realize, hey, we're going to need storage. We've been talking about this for months. So what is really that thing that's going to get us down? Maybe it's not the chips that are going to move. Maybe it's the understanding that you're going to need storage, and that's why memory is opening up and going so much higher. And that kind of boils back to, that kind of makes sense now if you think about why is Samsung opening up those DRAM plants again? Not because they're trying to be nice and lower DRAM pricing for everybody, right? All of a sudden, they just happened to get in line with NVIDIA and what NVIDIA wanted. Well, they probably did that because it was worth their money to do it all of a sudden, right? So if we think about it from that perspective, it starts to make a little more sense. So you're starting to see the Microns of the world. I mean, these things were just unstoppable today. And you start seeing that even the SanDisks, and people aren't really aware of this. I drew this about a month ago for people so they could kind of understand it a little bit. I guess I still have it up here. On how you should really look at the world and what are the data centers and where's the power coming from and how do you connect all the dots. This is kind of how I saw it when I mapped it out. I might as well just leave it up here now why it's there. But you have like the gold miners. They're the ones that are looking for the gold. How do they mine the gold? They mine the gold with Oracle, AVGO, AMD, NVIDIA. Where are the data centers? They're right here. So you can think the data centers is like their plot of land, right, to go and mine the gold. This is where they mine it. How do they power like their sifters through uranium and electricity? And then where do they store the gold, which is actually our information when they find it, and they store it here and they use their memory. You can think of the bank tellers as, Micron and SanDisk. And then you can think about the actual physical safe as STX or WDC, et cetera. It starts to make sense if you think about it that way, right? But we went through this like a month ago. I'm pretty sure we went through it publicly too, but I definitely went through it before then privately with the community, and we've been all over it. It makes a ton of sense, and what you're doing is you're rotating through it. But when you start seeing like ChatGPT come out with some of this stuff, where Sora 2, you're starting to see the old guard just fall apart. And it's not just going to be these guys. It's going to be a bunch of like even newer companies like Figma's toast, man. Like this thing's just done. Put a fork in it. All they did was go public so that they could get out alive before it's too late. But this thing's just a disaster. Earnings, the growth, everything. And you're going to see some of these companies that are just the amount of destruction AI is going to cause. I don't think people have a clue. You just have to find the right names to find where it's going. We saw this today too with people all of a sudden going, oh yeah, Meta's not going to be around. This was kind of dumb. I guess that would be the technical term I would use. Like this makes zero sense to think that Meta somehow is not going to be a player in this while they're spending more per capex as everybody else, right? And they have the entire database of Instagram. They actually know what I'm thinking when I start seeing ads pop up. It's bizarre. But somehow all of a sudden they're going to be hurt by this. I could see OpenAI's comments on Reddit scaring the Reddit people. That makes sense to me. That would scare me. If OpenAI is trying to get away from Reddit, yeah, that's a problem for Reddit because that's going to drive down their ad dollars because they're not going to get the same traffic. If you don't get the same traffic, you don't get the same ad dollars. So you have to connect all these dots. We'll do more of this on Saturday, but I think that's the nuance here. So you see it as well as I do. I don't even have to point it out to you probably, but that was your call wall in green, left head, right shoulder, neckline. You technically say the neckline's here. You break 200, where are you going? You're going lower. That's going a lot lower if you break that 200. So if we took the breakout bar and we just dropped, right, the volume profile from there, and I'll clean this up for you so you can see what I say, and you could do it for yourself. All I did was take the volume profile from a pain point, which is a breakout. If you're not in it, you're in pain because you don't own it. And you kind of see what you're doing right here. You can see that close. That's the worst 4-hour close we've had. Now you're oversold, so maybe you get some kind of bounce up and then you do the death roll. But if you break, 183 is on the table. 183 doesn't hold. We're staring at 163 fast. Remember guys, it's stairs up, elevator down, and we should say window. And now you've broken point of control from there. And again, if we just use the simple pain points of, okay, from that earnings, where do people own it? Well, today's the first day that you really fully closed, even here, By the end of the day, you were at least green, and then the next day you were over it. This is your first close under the IPO VWAP, or I'm sorry, the earnings VWAP on Reddit. So that's not great. I've seen great before. It doesn't look like that. Maybe you can try and hold that 200 level, maybe. I do think Meta is going to hold here. And we are seeing these IGV names start to pop up again. There's some old time favorites that are really starting to struggle to fall apart. Some of them are falling apart a little bit. Some of them are struggling, like here, watch. So like here's CRM, and 240 is just like, they're done. Put a fork in it. Especially these kinds of bars where you pop over and they fill you with hopes and dreams, and then they sweep your legs. They're the ones that you really want to watch. Like that's telling you that you have a problem. You can see the breakout from there. So when you start to see that kind of stuff, yeah, it's definitely an issue. 100%, it's definitely an issue. It's certainly something that you want to watch and pay attention to. But, you go and take a look at Oracle today. And, this thing with Oracle is really misunderstood. I'm going to probably do some of it on Saturday. But, you're looking at this and going, all right, well, maybe that's it. And that very well could be. That could be it. Let's get through some of the stuff that we really have to get through, which is obviously going to be the government shutdown. But there's a nasty piece of information before non-farm, and I do want to cover it quickly. Now, in front of you is the ADP employment change. I was going to say non-farm payroll. It's been a long day. And I just want to show you this on the 3-year. I'd have to go back to the pandemic to see anything like this. So all of a sudden, you're having some negative employment change. This doesn't happen. In front of you is 3 years. You've had it once, and the only time this happened is when we thought we were going to lose every regional bank, for those that remember. Look what's going on over here. We don't have that. So this is really important for us to get, and certainly important for us to pay attention to. Cannot stress this enough. So for us to pay attention to this, understand that this is a clear sign that they're going to have to cut rates. Very clear. This is not normal. And non-farm payroll is predicated upon this. Should it come out, should we not have a government shutdown, it's going to show that non-farm payrolls, at least the private side's pretty weak. So keep that in mind. Now for tomorrow, we have some decent sized events, but one of the bigger events that I see out there right now is going to be obviously Tesla deliveries and how that plays out. We can see the stock breaking out on that. At time recording this, I do have a position in it. I was surprised with the Italian delivery numbers being so weak that the stock went up. I tend to look at these things and say to myself, okay, these are certainly things that I want to pay attention to, but at the same time, we completely blew it off. Watch if we drop this down to a 5-minute bar, and we had this nailed perfectly today. I didn't add to it, but I know a lot of guys in the community did, and I pointed it out because I do the live trading in the morning. So I dropped the VWAP from the breakout, leave the VWAP on, and you can always leave these things on because then you'll see if there's any relevance to them or not, right? They tell you if it's significant. You don't tell it. So you see how it was significant here at 315 on the previous day. So if you see a level that's significant the previous day, right? You see how it broke out when it finally got above there? See how it tested here in the morning? Like that told you, hey, this level's still significant. Now, that doesn't mean it's going to hold, but it tells you that there is significance there. So when it dropped, it was a super easy trade for guys. Like you're buying that bar. You're either buying the doji after it closes over that bar using this low as your stop, or you're buying that bar. Either way, the trade was there. I didn't want to do it because I already owned it. But from a day trading perspective, it was an excellent trade. Just absolutely killed it. So, and it just got stronger as the day went on because I think people are afraid of not being in it on earnings. And now, of course, you have the news on Elon being worth $500 billion. I don't know how he's worth $500 billion here, but he wasn't worth $500 billion over here. But it makes 0 sense. But I guess they need a headline for tonight. But you can see the close here, the previous close here, and the previous close there. So I do think this is the one to watch tomorrow. We can also talk about NVDA and how this hit another new high. And it's definitely something to pay attention to. I think you're setting up for a 2-handle by the end of the year. But the real story is the rotation and the broadening out. I don't think we can be any clearer about that when you start going through your charts and saying IGV, they're holding. Look, semis are holding. They're breaking out, hitting all-time highs. And you're starting to see more broad-based participation in all those names. They're all breaking out. Like there's KLAC moving. And it makes sense too. If you need more storage and you need more memory, you're going to need more chips. If you need more chips, you're going to need ASML because that's how lithography, other than that, it doesn't exist, right? So, I mean, everybody knows that. You can't create these chips without the lithography machines. And so then you're going to need more of those, right? Which Samsung's firing back up, and then you're going to need more semiconductor, equipment. So that just, if you keep going through this over and over again and connect the dots, it starts to make a lot more sense. So you'll see stocks breaking out. Like none of this is telling you you're going lower, like none of it. So I keep waiting for these pullbacks. And what tends to happen for me as a trader in these environments is I do tend to try to close as much as I possibly can, because you tend to have those gap downs the next day, and then they are pretty lucrative, or at least you have those sell-offs where you can get involved. I'm just not sure what you're really going to see here from the STX and what you're going to see from the other side of this. I would say this. I'm leaning towards that the DRAM, more the SanDisk kind of trade could gap down, or the Micron trade could gap down a little bit more than we're going to see the STX trade gap down, or the WDC trade. And I'll tell you why. People have no clue how Western Digital or STX are even tied into AI or data centers. I mean, they're just like, if you really think about it, like this is what I was saying about research. People have no freaking clue, because even if you look at Dell, like they don't even understand why Dell's moving or why SMI's moving. Not that people are out there buying SMCI equipment, but yeah, you're going to need all this equipment, and then you're going to need data centers. And that brings you to FRMI, which is, a data centers facility that also is set up specifically for AI and has all the nuclear and natural gas there, right? And you can see how that did today. We actually nailed this, bought this like literally right off the open, and just all I was looking for was a close under it. It IPO'd at 21, and then you're at 25. One thing, if you are trying to get in the community, please look for a letter. It should be out. If you're on the wait list, I'm rolling them through this week, because definitely in January, because some of the new services that I'm adding are pretty expensive. So we are going to raise the price. It's probably going to be double what it is now. But if you're in, you're in. All right, that's it.